Blockchain.com is one of the newest headlines we found out about them taking a huge loss from the default of Three Arrows Capital. Quote, this is from the Peter Smith, CEO of Blockchain.com. Three Arrows is rapidly becoming insolvent, and the default impact is approximately $270 million worth of cryptocurrency and US dollar loans from Blockchain.com. Blockchain.com is a well-known startup within the space. They're founded, I believe, in 2011. They were first with a wallet, a blockchain explorer, many other products, and they've moved more into the financial aspects of all things crypto over the last few years. It's interesting to see them take a loss, but I think what we're seeing as more information comes out about Three Arrows Capital is that basically anyone who was in the lending game was hit by this. Three Arrows Capital was rehypothecating all of their assets for collateral to take out even larger loans. And a lot of times these firms didn't realize that Three Arrows Capital was doing it. They didn't know that this collateral had already been pledged on different loans. So when the liquidations came around, the first people to take the collateral off the table were the ones that were okay. And everyone else who wasn't quick to get that collateral is ending up with an empty bag. It's a rough situation. Luckily, it seems like Blockchain.com will be okay. A lot of these larger firms, $270 million is a lot, but it's not enough to really destroy operations or put them in a bad spot. It's just something they wipe off the table and fix operations for the next year. Wendy, I'm going to throw this one over to you, though. It is definitely interesting to see yet another big name involved with this 3AC debacle.
That's why I don't think that we've actually capitulated yet. Yes, we're having a really nice price pump. We saw that we kissed like $22,000, which is great. I still do believe that we will have some sort of melt up that will occur before we actually capitulate, because I don't think that this is done yet. We keep seeing brand new stories come out of so many different firms that were impacted, so much money being lent out and collateralized and all of that. So I personally don't. I think that this is going to be this bear market is going to be a lot worse than the 2018, 2020 bear market, because there's just so much money, and these guys had their hands in so many different pockets. It's like crazy. It's like they didn't loan money to me, or I didn't give them money because I'm down here on the totem pole. But it's like to me it's crazy, because the way I grew up like, I had a very interesting life, and I just don't like people that I grew up around. They just don't give money out. Like there's no and I'm not understanding how these people with degrees and these fancy suits, everybody's just okay with giving all this amount of money out. Like what actually was happening behind the scenes? And again, we're going to see more lawsuits, and this whole thing is going to get drug out for a lot longer, in my opinion. Adam, over to you.
Yeah, I mean, I think that the answer to your question in terms of why people give money to companies like this is because they think they're going to make a bunch of money off of it, right? Like people don't lend for charity, people lend. And that's what a lot of these companies have become, is they've become lenders, right? Like blockchain.com, I don't think I even knew that they did loans, and they probably don't advertise that they do loans, but they have so much money that they can lend, they can do loans. And, to a player like Three Arrows Capital, well, if you've got billions of dollars in assets under management and you've been around for, 9 or 10 years or whatever, then it seems like it's at least plausible. Now, the comparison that keeps coming to me, and I don't know if it's correct, but this feels like Archegos, right? This feels like sort of the collapse of the hedge fund that then had rehypothecated and had huge debts out with many of the major banks in the traditional financial world. And then when it collapsed, it caused the same sort of contagion. But of course, the government's there to backstop. You've got, and there are kind of other ways to resolve that. So we don't have anything like that in crypto. So although this has been brutal, and it remains a brutal environment to be doing this stuff in, I continue to be actually pretty optimistic about how things are going to go over the next, call it 6 months. Relative to a multi-year bear market like we've seen in the past. This feels to me like it's the flushing out of a lot of really bad decision making made by these companies. And it's definitely going to hurt people. There's no question about that. It's definitely going to give a pretext for people to come in, or for regulators to come in and make new rules should they want to do that. But at the same time, I like that. I would rather the companies that take stupid risks fail faster and then no longer be out there, rather than the alternative that we see. Again, Japan is a huge example of that, where you have these gigantic zombie companies that just like lumber around, can't really do anything, but also can't die. And so the people and the capital tied up in them just kind of stay trapped forever. And then it becomes the government's problem. So Wendy, what do you think?
I understand what you're saying, and I hear what you're saying. My issue, though, is that I just wish it didn't impact so many retail users, because let's face it,
there's no question about that. Yeah.
Yeah, no, of course. But of course, Celsius and of course, Voyager, they've been around for quite some time. And some of these other companies that were impacted too. So I just like, because I've got money locked up in both and I've already written that off. You know, I know I'm not going to get it back. It is what it is. But I know there's more people that might not be able to tolerate that type of risk. So that's what bothers me is we let a bunch of suits, we let a bunch of people come in and really screw the little guy over, and that's not okay with me. It doesn't sit right with me, and it starts to become very problematic because once these guys gets flushed out, who's not to say somebody else new is going to come in and do the same thing, and it's just going to continue to repeat and repeat and repeat. So that's just my stance on it, and I do have to advocate for the underdogs and the little guy because that's what I do. So that's that.
Yeah, so no question about any of that stuff. Again, like it's painful that this involves retail, but that's what always happens. Like the retail is always the kind of party that gets damaged in these types of situations. So on the one hand, that's true. On the other hand, you know, again, the alternative is the alternative, right? And I can't tell you how many mistakes I made in my early experiences in cryptocurrency that involved me losing a lot of money. I've had stuff stolen from me. I've had stuff stolen from family members. You know, again, like those painful experiences are painful. But to the extent that you then experience them, you feel them in a much more real way than reading about somebody else. So again, like these days, I don't do anything in crypto as far as like trading, as far as, you know, I didn't go for any yield or any stuff like that. And it's because I've been burned so many times in the past. I'm like, okay, my best play is just literally do nothing. And that's kind of the alternative. And so that's what I see here. I actually see that as a positive, not in the short term, but in the medium term, because it means that people will be more skeptical and they'll demand more stuff. And then one other comment, you know, fraud is illegal. There's a lot of stuff that's illegal. We don't need to make new rules to make conduct in crypto illegal. Like people do illegal stuff all the time. We just need to enforce the law. And that's partly lawsuits. And so I'm very happy to see that that's happening because that's a system that seems more effective at actually rooting out these bad actors and setting up incentives versus what we've seen with the SEC going after, you know, a handful of the absolute worst ICOs, when in reality, almost all of the projects that were launched in 2017, 2018, 2019 through the ICO mechanism are actually securities. So again, like my belief and faith in the government to try to solve these problems for us is incredibly low. And I think it's these painful experiences that, although very painful, are what actually help people to understand the reality of these situations much better as they go on in their journey.